So today we're going to take a look at Nike stock because at the moment they have major problems going on. On Friday, after this company reported earnings on Thursday, on Friday the stock was down 5%. I'm not going to lie to you guys, this stock could have been down 20+%. I would even argue the case right now that Nike has the ability to fall 50% from where they are currently at, which is obviously not a good place to be in. Now, we are towards the end of the video, I'm also going to talk about this guy because this guy also was down more than Nike stock because of Nike. And we'll talk about that towards the end of the video as well, because JD Sports is one that I do own. And obviously they get a good chunk of their money from Nike stock. So we'll talk about that as well a little bit later on in the video. But Nike stock, yeah, really bad day on Friday for these guys, but really they got away with one. And they got away with one because the stock could have been down even more than what it is right now. And the stock has so many issues. It certainly isn't a stock which is an easy money stock that was claimed by a couple of other YouTubers out here. It's certainly not easy money because as we've seen from that time frame, the stock is down 30 to 40% since that time frame. And the stock certainly didn't have good earnings, as some other YouTuber was complaining, saying the turnaround has started. I would have said after these earnings, if you actually look at the numbers, I'd be even more concerned about this company than where I was 3 months ago, which is not what you want to see, especially when you've already dropped so much and then you've also brought a new CEO in. And when you actually look at that point of view, the numbers have actually got slightly worse from that point. It's certainly not a position that you want to be in. Now, obviously, Nike has already had a bit of a tough time at the moment. If we do look at the stock, since where it peaked really around 2021, 2022, stock was over $166, down 53% since that time frame. Now, I've not actually been a fan of Nike stock because I actually personally don't think it's attractive value. Even with the drop it's on, I don't think it's attractive value. Even with the drop right now, I actually would say that even for me to get anywhere close to buying Nike, I would actually have to say the stock would have to be like 50% lower from where it is right now. And I'm going to show you guys some numbers in a little second. But what I did do is, I'm sure most of you guys were aware, the stock that I did like in this space was actually Lululemon. So I actually would buy in Lululemon during this time frame. And I actually made, I think, 70% gain on Lululemon, and then I sold it out around about a month, 2 months ago. Since then, the stock has dropped a little bit since then, and they do have the earnings report, I think, in the week coming up. So I will be keeping an eye on that one, and maybe it's an opportunity to get back in. But I always said, in my opinion, Lululemon was a better stock than Nike. Lululemon has more growth, clear growth drivers in China, and the valuation was actually cheaper than Nike, even though it's growing a ton faster and has a clearer game plan, and it's still very popular at the moment. And I said, like, for me, Lululemon is a better stock than Nike, and obviously that went on to perform absolutely amazing. If you were listening to Nike's easy money, well, obviously, you know, the only way that you're thinking Nike's easy money is because you've actually not been looking at the financials. And clearly, if you're thinking these earnings were good, you clearly just look at the headline numbers. You're not actually staring at the actual financials. So that's probably the first thing, is that what happened, I think, maybe, is that a few people stared at the headline numbers. And if you're just staring at the headline numbers, if you're just looking at analyst expectations, that's no good. You're not going to be very successful if you just carry on like staring at the analyst headline numbers. So if you look at the headline numbers from the analysts, Nike did a good EPS beat. Okay, yeah, looks good. Big EPS beat. That's absolutely amazing. Revenue decline of 9%. That's obviously not good. I think that's even worse than last quarter. But it beat by 205 million. So what happened is, I think a few people stared at those numbers, looked at the analyst numbers, went, oh, look, everything's okay. You can't do that in this game. You can't do that game going, oh, well, the beat analyst numbers, so everything's all right. You've got to look at the bigger picture. You've got to look at where the numbers are trending to. And if you look at where the numbers are trending to, that's where it gets very concerning for Nike. So the things that you have, and also let's not forget as well, the reason why those numbers look good is because they were so sandbagged. You know, Nike pulled the guidance a couple of months ago. So when you're pulling the guidance, they were already at the floor. So when you're already at the floor, you've got easy numbers to beat. The thing you want to see is that, okay, the numbers in here trending in the right direction. You brought a new CEO in, are the numbers trending in the right direction? And with the case with that is that they weren't trending in the right direction. So what you had here is, when you look to the earnings report, okay, Nike direct revenues were down 12%, which isn't great, because what you have here is the wholesale part of the business was down 7%. So straight away, that's a concern. If your wholesale revenue is growing faster than your direct, that kind of shows that you are relying on third parties. And if you're relying on third parties, the problem is that you're making less profit from it. That's the big issue that you have. Now that's good, because what it does say is that Nike are getting more and more reliant on the likes of third party resellers like JD Sports. So for this report, it's actually a good thing for JD Sports, because it actually shows that Nike are coming a little bit more reliant on them. This is also the issue as well that you have in this report, is that gross margins decreased 330 basis points. So because they are declining revenue, but also the gross margins are going even down even faster, your profit isn't only dropping the same amount of your revenue at 9%, you're actually in a position where you're going to start having your profit dropping more than your net income dropping more than your revenue growth, because you're not only just getting the drop in the revenues, you're also getting gross margins coming down. And when you look at the profit side of it, then you have a profit coming down at 32%. Now that's majorly concerning, because if your profit's dropping more than your revenue, that also suggests that you've not got only a sales problem, okay? You've got a brand, a pricing power concern, which is not what you want to have. Now the problem is with Nike is that, and I think a few people are making this mistake, is that they're looking at Nike and going, oh, 22 times earnings, that's okay for Nike. 22 times earnings is okay for Nike. And I would say if it was truly 22 times earnings, you'd be like, okay, that's actually not too bad of a value. The problem is that Nike isn't 22 times earnings, because the profit and revenue and the gross margins are dropping so fast. The profit is shrinking down so much. The profit margins are shrinking down so much. So actually, when you look at what Nike is realistically at, and it could actually even get a little bit worse for Nike than this, Nike is actually currently at a forward P of nearly 30. Now, if you're buying a company like Nike at 30 times earnings that has these issues going on, where revenue's declining, the gross margins are falling out the floor, they've got no pricing power. I don't like this space. I don't like the apparel space, because I feel like there's no loyalty in this space. There's no brand loyalty. And for that, you always want to be buying something at really low multiples if you're going to buy something in this space. And maybe you could argue the case that, well, Nike's probably the best loyalty in this area, and I'd say that's probably true, but it's not 30 times earnings. It's not 30 times earnings. You can't be buying a company for 34 times earnings that has these issues going on right now. If you want to if you're taking a risk with this stock right now, and if you're taking a risk with a stock that has these issues, these growth issues, these demand issues that Nike has, you don't want to be paying 30 times earnings for a company like this. You don't want to be getting a company at like 15 forward times earnings, 14. You want some of the negative priced in. Now, my problem with Nike right now is that it was overvalued previously. That's why the stock drop has happened. But people thinking, oh, the stock has dropped and it's priced in the issues that Nike have. In my opinion, it's nowhere near pricing these issues in. 29 times earnings, forward earnings for a company like Nike with the issues they have is still a rich valuation. That for me hasn't even priced in at all at the rate. That's kind of, for me, that's pricing in like the revenue decline, not actually pricing in how bad those gross margins are getting destroyed. And like I said, if realistically you want to be picking this up, probably 14, 15 times forward earnings to be taking on this risk right now, with Nike right now. And realistically, that would put it at half the value of what it is right now. You'd be going down to like $30 for Nike, and that would be where I would be interested in buying in Nike. And clearly as well, when you look at Nike, there's issues going on. Look at the teen surveys that are going on at the moment, and they'll tell you that Nike is losing market share. There is competition in this space. Now, I think Nike is the ultimate brand that will be around for many years, and they'll be able to redevelop themselves, and they will be able to re-get some market share here. But there's other people out here, easy money guy over here. There's other people out here that are claiming that this is no issue. This is no issue, this competition. And it is. You've got to take it into consideration. There is competition here. Now, I think they can resolve the competition here, but this is one thing that is hurting them. If you look at the current surveys that are going on at the moment, where does it say here for Nike? It does say it somewhere down here. So in footwear, Nike shed 4 points year over year, from 61% down to 57%. That's not good. This is the thing, is they are losing market share. People are, okay, there's some spending pullback going on at the moment, and that may recover and that might help them. But there's also people thinking, you know what, I can go buy all these other brands out here at the moment. And that is also an issue. And that is why you need to have some of the metrics in your favor, because of the level of competition that's kind of in this space here. Now, this was the worst bit. This is the worst bit. This is where, you've got the headline numbers here. It was already priced at the 4. There was a bit of forgiveness in these numbers here when they came out, because the CEO has already thrown the guidance on the 4. Now the problem is that when you dig further into the conference call, and the best place to do it is on Seeking Alpha, which, by the way, you can sign up. I've got a discount code in the comment section if you do want to join Seeking Alpha. And I was scanning through the conference call on Seeking Alpha because you can get all the transcripts on here. And if you have a look here at the transcripts from that conference call, the CEO made a comment of, for Q4, Nike report in weird ways on the quarter, so their upcoming one is Q4. It expects headwinds to revenue and gross margins to be its peak. So hopefully these sign up some kind of recovery here. But the thing is that they said that revenue during the quarter is expected to be down at the low end of negative mid-teen range. That's massive. So we've already talked about Nike already having big issues with their current guidance at the moment, and the slowdown is getting worse, the gross margins are getting worse, the revenue slowdown is getting worse. It's already pretty bad for them. But the fact that they went on the conference call and said, and by the way, it's only getting worse, this stock is nowhere near the bottom at the moment. That's nowhere near the bottom. And that's all right for them saying, okay, this is going to be the worst, but they don't know that. What was if a recession comes around the corner? They have to, there's a point where the CEO has to be protective of the company share price, and maybe had to do that and say, like, oh, this will be the worst it gets, but it can get a lot worse. And the only information they have right now, that's the suggestion. It's only going to get worse. And look here, the revenue during the period is going to be down to the low end of negative mid-teens range. So if we say, like, what's that, 17-18%? So 17-18%, it's already bad at the moment, but the fact it's going to slow down double on what it already has, that is massive. That is a massive downgrade on the guidance as well. While gross margins is seen retreating quarter over quarter. So the gross margins were already bad last quarter. If we look here, the gross margin is already down 330 basis points. They're also suggesting it's going to get even worse than that in the next quarter. So the revenue is going to get worse, and they've got no pricing power. So when I talked to you guys earlier, and I said, at the moment, you're not getting any benefit from this because you're paying up 29 forward times earnings for this business. More than likely, because the gross margins and growth rates are going to drop even more than that. This isn't realistically even 29 forward times earnings right now. This is realistically probably like around about 30, 33, 34 forward times earnings. That's crazy. That is a crazy valuation for a company that has all these issues. And like I said, the fact that was there in that conference call and the stock only dropped 5% was insane to me. A company suggesting it's going to get that bad in the next quarter, that comment there on the guidance for me would put Nike down. I think Nike should have been down nearly 20% on Friday. That's how bad it was, and it didn't. I think they got really lucky from that point of view. So we'll have a little bit of number talk, and then I'll finish off with some JD talk as well towards the end of the video. So looking at the number side of it here, I've put not pricing in any share buybacks, even though they do a bit of a share buyback. 3, 5, 7% revenue growth. I mean, nowadays, if they can get to the 7% revenue growth, that would be pretty impressive. I put the revenue guidance in here, which I'm actually looking here and I'm thinking, I don't know if I have to start pricing in lower revenue than this for the full year. 9, 10, 11% profit margin. With the way that these profit margins have fallen off at the moment, even that might be a little bit optimistic. And then I put 20 times earnings in because I don't want to assume a crazy valuation. And yeah, I think that I'm being very generous with these numbers, and your return here is at 30%. It's just not worth it. Why would you want to take the risk on for 30% a year? It just doesn't work. It's not worth it at all. If I was to change it, and let's be a little bit more generous. Let's say it goes up to a 30 times earnings. Okay, then you're starting to get a little bit of upside there, 66% to nearly 100% upside. I mean, to get where I want, so normally when I buy a stock for the next 5 years, I want over 100% upside. To get to an over 100% upside, I've got to assume some really brave numbers there. I'm assuming back to 7% revenue growth, which they're nowhere near doing. 11% profit margin, which with the way these gross margins are compressing at the moment, that's a big ask for them to do. 30 times earnings multiple, which I don't know if they can get to a 30 times. And then I'm barely scratching 100% return. For me, Nike has to go down to about a 50 billion market cap, and for a 50 billion market cap, there's a risk to reward, or even maybe that's even a little bit harsh. maybe I put in like a 60 billion market cap. Yeah, a 60 billion market cap. That's a lot better risk to reward there for me. So yeah, I personally wouldn't be touching Nike unless it drops another 40-50% really. I mean, to get to them sort of levels, obviously you're going way far back here, but that's the thing, I don't want to be buying a great stock at an okay price. I want to be buying a great stock at a good price, a great price. And right now for me, I look at Nike and I think, it's a good stock, I think, a good business, a good brand, but I'm not getting a good price for it. So it all comes to risk to reward. I can think of plenty of other stocks where I think they'd outperform it, which then leads it on to JD Sports. So for JD Sports, this is actually one that I have been buying that gives me some exposure to Nike stock, because obviously a lot of their sales do come from Nike. The big thing that I like about JD Sports is that obviously they're able to kind of sell whatever is popular. So if Nike has a bit of a downturn, they can go in and get some of the more popular brands, maybe like Lululemon, for example, Deckers. They can go get some of the popular brands in and hope that makes up for the drop off in Nike and their financials don't decline as much. And as we can see with JD Sports, they're needed. People always say, what happens if Nike moves away from them? Well, they're not going to move away from them anytime soon when their wholesale business is doing a lot better than their Nike direct sales. And the thing with JD Sports is that this is getting priced like it is struggling. You look at JD Sports compared to for Nike, for example, the fall off has been a lot more aggressive than Nike stock. And with JD Sports, you are picking this up at 6 times earnings. Nike is 34 times earnings. JD Sports is a 6 times earnings. But the big difference between JD Sports and Nike is that JD Sports financials have actually been holding up okay. You look at the revenue growth, their revenue growth has just gone from 10.5 billion up to 11.4 billion. You look at the profit has just gone from 539 million up to 639 million. So all the metrics, what's supposed to be a bad time for JD Sports, all the metrics are actually going up in the right direction for JD Sports. But yet this is getting punished more than Nike, and from a valuation basis, it's getting more punished than Nike. And what was a period of time where people said, people have thrown JD Sports under the bus because they've had a 3% profit margin, 3% profit warning, a 3% profit warning. Yet during that time frame, we've just seen how much the revenue has gone up by. We've seen how much the profit has gone up by. And then we look at it like the main driver, the main dog in the space. You look at their financials where we're seeing things where their revenue is going down 9% a year. We're looking at their net income, and their net income is going down by 32% a year, right? So look at Nike's financials. Look at how much they're collapsing. But yet JD Sports is getting punished just as much as Nike, and it only gave a 3% profit warning. And that's why the revenue just grew nearly 10%. The net profit is up massively as well. What's the net profit up by? The net profit is up nearly close to 20% during that time frame. And it's at 6 times forward earnings. And this is where it gets even more crazy for JD Sports, is that the fact that people saw Nike's earnings on Thursday or Friday, whichever, and then they decided to shove JD Sports down an extra 5% on Friday, which it was actually having a pretty good week until that point as well. I was like going, this is doing all right. And yet they shoved it down more than Nike stock because of Nike. But yet then you look at JD Sports and you look at the numbers that they've just done this year compared to the likes of Nike. And then you look at the valuation compared to Nike. Absolutely bonkers. Absolutely bonkers. There's some times where you look at the stock market and it's so in disconnect with what's going on. But what hopefully that will lead to is that I do believe in the long term, JD Sports will outperform Nike stock. I think JD Sports will perform Nike stock because of the big disconnect that's going on here. You look at the valuation, the financials point of view. Yeah, I think it blows your mind right now in the short term that the market is mispricing it so wrong. But it could be that opportunity where it is able to create you a better return overall. So that's where it's at. It's interesting when these sort of things go on really overall in the market. But yeah, that's my overall opinion with Nike. I think it's way off being an attractive valuation overall. It would have to fall another. I think it should have been down 20% more on Friday. And I would have to say, for me to get interested, it would have to be down another 40-50%. And I think there's better companies in this space. I think JD Sports, you are getting exposure through Nike because a lot of the sales do come from Nike. And when Nike does have that rebound, I would expect that to help JD Sports sales. And I think, JD Sports is the better value, the better growth story. So yeah, that's everything overall. So hope you enjoyed it. Thanks for watching. See you in a bit.